Hey everyone, welcome back for another deep dive. Today we're looking at, something that's probably on a lot of your minds as you get closer to retirement.
Mm,
It's how to make those savings work for you,
yeah,
just as hard as you work for them.
for sure.
We found a really interesting YouTube video titled Best Savings and Investment Options for Senior Citizens in 2025 by 5 Minute Finance. Have you seen that one?
Yeah, I have.
What'd you think?
It's a great video. It's a really, I think it's a great place to start for anyone who is, thinking about how to get their finances in order
Yeah.
before they retire.
I like how they start out with a pre-investment checklist before
Well,
you even think about specific investments.
it's like building a house. You don't start with the fancy stuff, You got to make sure that foundation is solid.
Right. Exactly. What in that pre-investment checklist stood out
Mhm.
to you the most?
You know, it's interesting because they highlight some things that a lot of people just kind of, forget about or don't think about as much.
Yeah.
And they're really crucial for retirement, like having an emergency fund.
Oh, right.
They suggest at least 12 months of living expenses
Mhm.
tucked away in something like, um, a high yield savings account or maybe even a liquid fund.
Makes sense. What if, the car breaks down or something like that?
Exactly. You don't want to have to touch those long-term investments
Okay.
if something unexpected happens.
Yeah. I was actually surprised, I have to admit, by how much they emphasized getting health insurance.
Oh, yeah.
Like really good health insurance before you hit 60.
Really smart move. Not only to get a better rate, but also just, it saves you so much stress
Right, right.
down the line when you're retired because healthcare costs
Oh, for sure.
can really drain your funds.
Okay, so you've got your emergency fund set up, your health insurance is all squared away. What's next?
Next is something you've probably heard a million times, but it's so important. Yeah.
Especially as you get close to retirement.
Hmm.
Diversify. Diversify.
Oh, you were going to say that.
Well, of course,
No.
it's all about balance, right? Protecting your savings,
Yeah.
but also making sure that they're still growing.
Okay, so what does diversification actually look like in practice?
So basically, you want to spread your investments across different asset classes.
Okay.
Stocks, bonds, maybe real estate, if that's a possibility for you.
Yeah.
Each one of those has a different level of risk,
Yeah.
and they all perform differently depending on what's happening in the market.
Got it.
Yeah.
So if one's not doing so hot, the others kind of make up for it.
Yeah, exactly. Diversification is like having shock absorbers
Ooh.
for your portfolio. They help to soften the blow if one area takes a hit.
I like that analogy. Okay, so we've checked off the pre-investment checklist. Let's dig into the specific investments they recommend. They mentioned something called the Senior Citizen Savings Scheme. I don't know if I'm familiar with that one. So the Senior Citizen Savings Scheme, it's, also called SCSS. It's really popular here in India and for good reason. It's backed by the government,
Okay.
which means there's a certain level of security there.
Right.
Right now, it's got a decent interest rate, 8.2%.
Okay.
But, as with anything, that could change.
Right. Right.
One thing to remember is that the total investment can't be more than 30 lakhs, I think, across all of your accounts.
Oh, okay. That's good to know.
Yeah.
Now, what about folks who are looking for, a regular income?
Right.
They also mentioned the post office monthly income scheme.
Oh, yeah, that's a good one.
Yeah, POO&S, right?
Tumis, yeah.
That sounds good if you need a predictable payout every month or so.
Yeah, that's right. Right now, it's offering 7.4% interest.
Oh,
And
yeah.
you can invest a pretty small amount, like 1,000 rupees to start,
Oh, wow.
which is nice. But one thing to think about with Pruin is inflation.
Oh, yeah, of course.
In the long run, those returns might not keep up with rising costs.
Right, right. So it's good to, keep that in mind.
It's a good piece of the puzzle, but maybe not the whole puzzle.
Got it. Okay, so we've got SCSS
Yeah,
for security,
right,
POMIS for regular income.
right.
What else is there?
The video also talks about senior citizen fixed deposit schemes.
Oh,
A
yeah.
lot of people are familiar with those.
Mhm.
It's basically, banks will offer a higher interest rate on FDs,
Oh, wow.
specifically for seniors. I think SBI is offering 7.3% right now for a 1-year FD for seniors.
Those are pretty safe, right?
Yeah, they are, especially in the short term. But, similar to a POMAS, those returns might not always keep up with inflation,
Oh, right.
especially over, longer periods.
Got it. Let's talk about mutual funds. They mentioned those too, right?
Yeah, they did.
3 main types.
Hmm.
Equity, debt, and hybrid. It's important to understand the differences between those.
It is, yeah, because they each have their own, level of risk and potential rewards.
They said that debt funds, especially the liquid funds,
Yeah.
are good for your emergency fund because they're low risk and very liquid.
Yep, that's right. Easy access to your money, so you don't have to worry about penalties if you need it,
Right.
in case of those just-in-case situations.
Makes sense. Okay. Now, where do equity funds fit into all of this, especially for someone who is nearing retirement?
Okay.
They do say that they're riskier, but can lead to higher returns over time,
Yeah, that's the trade-off.
especially over a longer period.
Right, and I think that's the key. They emphasize that retirement is a long game.
Oh, yeah?
It's not like you retire and cash everything out on day one.
Yeah.
It's about creating income, that could last for decades.
Right. So how does that long-term perspective affect how you approach those equity investments?
Well, let's get into that after a quick break. Welcome back. So, where were we? Oh, yeah, the idea of retirement is a long-term thing.
I like that part of the video.
Yeah, that you don't just need all your money right away. You can think about investments a little differently.
Especially equities, right?
Right. Because if you don't need to access it all at once,
Yeah.
you can take on a little more risk, maybe, with some of your portfolio.
Okay.
And historically, equities, they have a better chance of giving you higher returns over time than things like, safer options like fixed deposits.
Right. But risk is kind of a scary word when you're thinking about retirement, right?
Oh, totally. I mean, it's natural to be a bit more cautious
Yeah.
as you get older, but here's where the long-term view really matters.
Okay.
When you have more time.
Yeah.
You have more time to kind of ride out the ups and downs of the market.
Oh, so those dips don't seem so bad because you have longer to recover.
Yeah, exactly. Plus, generally, the stock market goes up over the long term.
They mentioned the Nifty Y50.
Yeah.
How it's like delivered around 10 to 12% returns over 10 years or more.
Right, and that's tracking those top 50 companies in India on the National Stock Exchange. So it really shows you how India's economy is growing. Companies do well, stock prices go up, it all connects.
So even though, past performance doesn't guarantee future returns,
Right,
it gives you an idea of what could happen
exactly.
with equities over time.
It paints a picture.
Okay, so then they talked about within equity funds, there's large cap, mid cap, small cap.
Yeah, those are based on the size of the companies they invest in.
What are the differences there?
So large cap funds, they're going for the really big, well-established companies.
Okay.
Those are generally considered less risky than mid-cap or small cap.
Right.
Mid-cap funds, they focus on companies that are, still growing. They have the potential to become those large-cap companies one day.
So there's more room for growth there, but maybe more risk
Yeah,
too.
exactly. And then the small-cap funds,
Issues and lies.
yeah, the up-and-comers,
Yeah.
high growth potential, but definitely higher risk as well.
Got it. So picking the right mix there probably depends on how much risk you're comfortable with.
Exactly. It all comes down to your risk tolerance.
Right.
Yeah.
I feel like we keep coming back to that.
Well, it's really important, right? How comfortable are you with the idea that your investments might lose value?
Yeah.
It depends on your age, your goals, and just like how you feel about those market ups and downs.
So someone who is closer to retirement probably feels different about risk than someone who's just starting out.
Oh, yeah, for sure.
Oh.
Someone younger has more time to recover from those losses. They might be more willing to take some chances for the bigger rewards.
Okay, so how do you figure out your own risk tolerance? Is there, like, a test you can take?
There are questionnaires and things online.
Oh.
But really, it's about, honestly looking at yourself
Yeah.
and asking, how would I feel if my investments dropped like 10% in a year?
Oh, yeah.
Would I panic? Would I sell everything?
Oh, yeah.
Or would I just, write it out?
Yeah.
Knowing that it usually goes back up over time.
Right.
Right.
So it's all about knowing yourself and how you react to things.
Okay. And this can change too, right?
It can, yeah. It's
Yeah.
not a one-time thing. It can change depending on your life, what's happening, your experiences.
Like, when you retire, that's a big shift.
Exactly.
Okay, so then they talk about inflation, which always makes me nervous.
The silent wealth killer, right?
I like that. It's true, though.
It sneaks up on you.
How does it, actually affect our savings when we're retired?
Okay, so inflation is basically how much prices go up over time,
Right.
which means your money buys less stuff.
Yeah.
Like, say you have 100 rupees today, and inflation is, let's say, 5%.
Okay.
Next year, that same 100 rupees will only buy you what 95 rupees would buy today.
So if your investments aren't growing at least as fast as inflation,
Mhm.
you're actually losing money, even if the numbers look like they're going up.
It's like you're running on a treadmill. You're
Ooh.
putting in the effort, but not really getting anywhere.
You got to outrun it.
You got to outrun it, exactly. So it's not just about holding on to your money. It's about making sure it grows faster than prices are going up.
Yeah, especially in retirement, and you're living off those savings.
Right.
So we talked about diversifying, knowing how much risk you can handle, and now inflation.
A lot to think about.
Yeah. What did you think about the overall message of this video?
It was interesting how they kind of challenged the old way of thinking about retirement investing.
Yeah.
It's not just about keeping your money safe.
Okay.
You have to think long term, using things like equities
Mm-hmm.
to potentially beat inflation.
That's a good point, especially these days when people are worried about, their savings lasting.
Exactly. It's about making it grow.
But they also said to do your own research on specific mutual funds, right?
Oh, absolutely. What works for one person might not work for another.
So it's all about taking charge of your own finances and making smart choices based on your own situation.
Okay, before we wrap this up, there was one other thing they said that I thought was important. They really pushed getting advice from a financial advisor.
It's so important, especially with retirement.
Yeah, there's a lot to it.
There is. A good advisor can really help, create a plan just for you, help you choose investments and all that.
Right.
And they can help you change things as you go, too.
It's like having a co-pilot on this retirement journey.
Exactly. Someone to help you stay on track
Made good decisions.
and avoid those, big mistakes that could cost you.
Okay, so to wrap up our deep dive into, investing for seniors,
Yeah.
what's the one thing you want our listener to remember?
I think the most important thing is that you shouldn't wait to plan for retirement.
Yeah.
It's a journey.
It's not a last-minute thing.
Yeah. It takes planning, thinking long-term, and being ready to adapt as things change.
You can't just pick a few random investments and hope for the best.
Right.
It's about, like you said, a solid foundation, knowing how much risk you can handle.
Being informed about what's out there.
Yeah, all of that. Okay. Now, for our listeners, what should they be thinking about after this? Of these investment options we've discussed, which ones sound the best to them
Oh, okay.
and why? Think about your own situation.
Right.
How much risk you can handle.
Exactly.
And what you want your retirement to look like. And like the video said, maybe even talk to a financial advisor.
It's all about you. Your retirement is unique, so your plan should be unique too.
That's a great point. Thanks for joining us on this deep dive. We'll be back next time with more. Until then, happy investing.